whatever the transaction which takes place between A Limited as well as bank will be recorded in one book which is called as cash book, where my bank balance have decreased but it's not known to me. I have not recorded it all. So what happens? My balance shows more, whereas passbook balance shows less. Credit balance, that is favorable balance as per passbook, means what? Deposit. So it is just reverse. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 8th session of Unit 3 of the subject Fundamentals of Business Accounting, and this is for first sem B.B.A student. So your Unit 3 is all about subsidiary books. So already we have discussed lot of the concepts relating to subsidiary books. So let us quickly recall what we have discussed in a previous session. So in a previous session, I have covered this topic, that is we were discussing about petty cash book. So what do you mean by petty cash book? All the small transactions that have taken place in the business organization will be recorded in one subsidiary book, which is called as what? Petty cash book. So petty means what? Small. So all the transactions related to small, that is all small transactions will be recorded in the petty cash book. In today's session, we shall continue with a new concept, that is continuation of this unit, that is bank reconciliation statement. So this is not a subsidiary book, but you will have this concept under your syllabus, that is bank reconciliation statement. Now what do you mean by bank reconciliation statement? So you are going to consider two books. One is cash book and the other one is passbook. Now, whatever the transaction that takes place between the business as well as the bank. For example, when the business starts expanding, of course, the transaction also increases. So, thereby, they move on to the bank transactions. So, there is a relationship between the organization as well as bank, where they are going to maintain two types of book, where the organization will maintain the book which is called as what? Cash book, and the bank will maintain the book which is known as what? Passbook. Now remember, organization will maintain all the transactions relating to bank as well as the organization which taken place between them. So which book is called as what? Cash book. Whereas in the same way, this bank also will individually open the passbook for each and every organization. For example, if A Limited, so if A Limited is having transaction with the bank, so what does A Limited will do? Whatever the transaction which takes place between A Limited as well as bank will be recorded in one book which is called as cash book. In the same way, bank also will open a account or open a book of A Limited and maintains all the transaction that takes place between the bank as well as organization. That book is called as what? Passbook. Now, it is understood that suppose if the cashier records all the transaction in the cash book that takes place between the bank as well as organization, at the same time, here the banker also maintains a book known as passbook, where he also records all the transaction that takes place. So it is understood that both the balance of cash book as well as passbook should be same. But what happens in certain situations, the balance between these two books will not be same. So in that situation, in order to make or in order to identify the difference and in order to tally our bank balance as per cash book as well as bank balance as per passbook, we are going to prepare a statement which is known as bank reconciliation statement. Now what do you mean by bank reconciliation statement? It is a statement which is prepared in order to tally or reconcile bank balance as per cash book and bank balance as per passbook. Now you might get a question, suppose both book balance are same, then whether we have to prepare bank reconciliation statement? No, no need to prepare the bank reconciliation statement. We will prepare only bank balance as per cash book and bank balance as per passbook differs. So it shows a difference. Then only we are going to prepare the statement which is known as bank reconciliation statement. So hope you have understood about this concept. And one who maintains a cash book is known as cashier, and one who maintains a passbook in the bank is known as banker. So in order to reconcile or in order to rectify the difference between bank balance as per cash book and bank balance as per passbook, we have to prepare this statement which is known as bank reconciliation statement. So let us see the meaning of bank reconciliation statement. So bank reconciliation statement is a statement mainly prepared to reconcile. To reconcile means what? To tally. Okay, so to make both the difference same. So to tally the difference between bank balance shown by the cash book and bank balance as per passbook. So in order to make those difference same, we are going to prepare a statement which is known as bank reconciliation statement. Hope you are clear with the meaning of bank reconciliation statement. Now we shall move on to the causes of difference between the cash book balance and passbook balance. Now let us see. So as I told you, if there is difference between both the balance, that is cash book balance and passbook balance, then only we are going to prepare the bank reconciliation statement. So let us see what are the few causes. So what makes them to have the difference balance in both the books? Okay. So first one is difference caused by the time gap in recording the transaction. So there may be a chances that in the passbook they might have recorded immediately, but in the cash book they might not have recorded. So for example, if the transaction have taken place today, I have immediately recorded in my cash book, but it is not known to the bank. So due to that, or I'll inform tomorrow. So tomorrow they are going to record the transaction, correct? So due to this time gap, that is due to the time duration, what happens? The balance or the bank balance as per cash book and bank balance as per passbook does not tally. For example, if the transaction have taken place last week, I have recorded the transaction last week itself, but I have not informed to the bank. So bank is not aware about it. So today I am going to inform. So if I check in between, that is between that 1 week, what happens? Of course, I should find the difference between cash book as well as bank balance as per passbook. So due to time gap also, certain times our bank or the passbook as well as cash book does not tally. And the second one is difference caused by errors committed in recording the transaction. So we can't tell that we are perfect in recording the transaction. There might be certain errors which is being conducted by us. So in that situation also, it may be knowingly or unknowingly. So I might have committed certain mistakes. So or I have committed certain errors. So those time also my bank balance as per cash book and passbook does not tally. For example, instead of writing 1000, I might have written it as 10,000. So there is a lot of difference here, correct? So in that situation, so in one book the transaction might have correctly recorded as 1000, but in other book I might have recorded wrongly. So in that situation also this difference may occur. So let us discuss in detail, that is difference caused by time gap in recording the transaction. So what may be the causes which leads to time gap or the errors which is happened due to time gap in recording the transactions. So the first one is check issued but not yet presented for payment by the bank. So check has been issued by the organization, but it is not actually presented for payment in the bank. In that situation, if we check what happens, of course there occurs a difference between these two balance. Next one, check paid into bank but for collection but not yet credited by the bank. So I have paid check into bank and I have credited in my or I have recorded in my cash book, but it is not been credited by the bank. So it shows less balance there. Of course, there is a difference. Next, check paid into bank for collection but dishonored by the bank. So I have paid check into bank but the check is actually dishonored. So I have recorded correctly, but what happens, actual situation is what? The check is dishonored, so it is not been recorded in the passbook. So of course there will be a difference. Next, interest allowed by the bank. So certain times interest may be charged by the bank, which may not be known to the organization, where the organization might not have recorded, but it has been recorded in the passbook. So there also occurs the difference. Interest charged by the bank on overdraft. Suppose in my bank account there is a overdraft for which the bank have charged the interest, where my bank balance have decreased, but it's not known to me. I have not recorded it all. So what happens? My balance shows more, whereas passbook balance shows less. bank charges and commission charged by the bank. So there may be certain charges or there may be certain commission which is charged by the bank, whereby the bank balance as per passbook have decreased. But I don't know about anything about those bank charges or commission. So my bank balance shows more balance. So thereby there is a difference. Direct deposit by a customer into the bank. So certain times, suppose I have an organization where my customer, that is unknowingly, he has directly deposited into my bank account. So what happens? Of course, bank balance as per passbook have increased. But it is not known to me. So what I'll do, I'll not record those transactions. So my bank balance have decreased. But as per passbook, it has been increased. As per cash book, it is showing less. Next, interest and dividend collected by the bank. So what happens in certain situation, interest and dividend might be collected by the bank, but it is not known to the cashier. So when interest and dividend is collected, what happens? Passbook balance have increased, but it is not known to me. So what I'll do? So my cash book balance will always be less, but it has been collected by the bank. So there will be a lot of difference between passbook as well as cash book. Next, direct payment made by the bank on behalf of the customer. So what the bank have done? On behalf of the customer, bank only have directly paid the amount. But it is not known to the organization, where organization who maintains the cash book, they might not have recorded. So here the cash book balance is showing more, whereas in the passbook balance it is showing less. So these are the difference which is caused due to the time gap, that is time gap in recording the transactions. Next, difference caused by errors committed in recording the transactions. There might be certain errors which is being committed by the organization or by the bank also. So during that situation also, bank balance as per cash book will not tally with the bank balance as per passbook. So the first one is errors committed in recording the transaction by the firm. So firm, that is the business itself, might have committed certain mistakes. So thereby those two balance does not get tallied. And the next one is error committed in recording the transaction by the bank. So it's not just that only the organization will commit the errors. So there may be a chances that bank also might have committed certain errors. Thereby the balance between these two books will not get tallied. So this is about errors caused or errors committed by both bank as well as organization. These are the causes for difference between cash book balance as well as passbook balance, that is bank balance as per cash book and bank balance as per passbook. Now moving on to the next concept, that is a bank reconciliation statement can be started from any of the following balance. So how we are going to start our bank reconciliation statement? So you might start with debit balance, that is favorable balance as per cash book. So what do you mean by favorable balance as per cash book? So this you have to remember. So favorable balance as per cash book means what? Deposit. Or debit balance as per cash book means what? Deposit. So debit balance or favorable balance as per cash book is deposit. Credit balance, that is unfavorable balance as per cash book means what? It is overdraft. Unfavorable means overdraft. Favorable means deposit. Next, debit balance, that is unfavorable balance. For the passbook, debit balance is a unfavorable balance. Unfavorable balance as per passbook means what? Overdraft. That is debit balance or unfavorable balance as per passbook means overdraft. Credit balance, that is favorable balance as per passbook means what? Deposit. So it is just reverse. So you have to remember all the four conditions here, that is favorable balance, that is debit balance as per cash book is deposit. Credit balance, that is unfavorable balance as per cash book is overdraft. Next, debit balance, that is unfavorable balance as per passbook is overdraft, and credit balance, that is favorable balance as per passbook is deposit. So they might give the question like this, where they will, instead of mentioning favorable, or they might give it as debit balance as per cash book. So you have to remember it is deposit. So you have to know these four conditions. Okay, so this is about how the balance will be asked in your question. Now we shall solve a problem dealing with favorable balance. So favorable balance as per cash book. So favorable balance as per cash book means what? It is deposit. Now go through the problem, very easy problem, only thing is that you have to understand the concept. The cash book shows a bank balance of rupees 17,200. Now they have given cash book shows a bank balance, in the sense bank balance as per cash book. The first thing you have to remember is you have to know how to identify the base book. Okay, so they might give a problem bank balance as per cash book or bank balance as per passbook. Now in this problem they have given bank balance as per cash book. So cash book is the base book. Okay, so cash book is a base book and the balance is how much? 17,200. On comparing cash book with passbook, the following difference were noted. So by comparing the cash book with the passbook, they have identified certain difference. So let us see what is the main difference. So the first one is check deposited into bank but not credited. Now what happens? The organization have deposited check into bank but it is not credited by the bank. Now for this, the only thing is that you have to know which transactions to be added and which transactions to be deducted. Okay, so as I have told you, we have to identify which is the base book. Now our base book is what? Cash book. Now go through the first transaction, check deposited into bank. Now assume that this is a cash book and this is passbook. Okay, so when check is deposited but not credited by the bank. When check is deposited, what happens? Bank balance as per cash book increases, correct? Because it is being recorded by the organization, but it is not known to the bank. So because bank have not collected it. Now which is a base book? Base book is cash book, correct? So adjust cash book to passbook. So what you have to do? Minus. Okay, so always make adjustment on base book. So what you have to do? This is minus. Next one, check issued but not yet presented for payment. So check issued, in the sense, always remember check has been sent. So check has been sent but it is not presented for payment. Now the base book remains same for the whole problem, that is cash book. Now this is cash book, this is passbook. So check has been issued. So when check is issued, bank balance as per cash book decreases. Whereas passbook is showing more balance, which is a base book. Cash book is a base book. Adjust cash book to passbook. So what you have to do? Add. So this is add. Next one, insurance premium paid by the bank. Okay, so but it is not known to the organization, where in the cash book they have not recorded. Now there are two books, one is cash book, other one is passbook. Our base is what? Cash book. Now insurance premium paid by the bank. Insurance premium paid, in the sense bank balance as per passbook have decreased. Okay, but it is not known to the cashier, so it is showing more balance. Adjust cash book to passbook. So what you have to do? Minus. So this is minus. Next one, bank interest credited by the bank. So here what happens? The interest has been credited by the bank. So this is cash book, this is passbook, base is what? Cash book. Interest is credited by the bank, in the sense bank balance as per passbook have increased, but it is not known to the organization, it is showing less balance. Adjust cash book to passbook. So what you have to do? Add. So this is add. Next, bank charges rupees 400. So bank have debited certain charges. How much? Rupees 400. Now this is cash book, this is passbook. Our base is what? Cash book. Now bank charges, in the sense bank balance as per passbook have decreased because it is a charge, correct? But it is not known to the cashier. So adjust cash book to passbook. So what you have to do? Minus. So minus. Directly deposited by a customer into bank. Now a customer have directly deposited into bank. So what happens? Bank balance as per passbook have increased. Now this is cash book, this is passbook. So bank balance as per passbook have increased because a customer have directly deposited into bank. But it is not known to the cashier. So adjust cash book to passbook. So what you have to do? Add. So this is add. Now they have asked prepare bank reconciliation statement. Once you identify these transactions, which one to be added and which one to be deducted, your bank reconciliation statement preparation is very easy. Now go through the solution. So you will write the heading bank reconciliation statement. Bank reconciliation statement. So how do you solve the problem? So your format is simple, particulars, and you will be having two amount column. So under particulars, you will write bank balance as per cash book, because they have given bank balance as per cash book. How much? 17,200. So write bank balance as per cash book. How much? 17,200 in the outer column. Next, you will write a side heading here, add. So whatever the items that has to be added, you will write one by one as it is they have given in the question. Now, which are the items to be added? So the second item, that is check issued but not at presented for payment. So write check issued but not presented for payment. So what is the amount? 2,800. So write that. After that, next item, bank interest credited by the bank. So bank interest credited by the bank. So what is the amount? 500. So write the amount. Next one, directly deposited by a customer into bank, 7,000. So take all the add items, that is 7,000. Now add these three, right in the outer column you will get how much? 10,300. That is 2,800 plus 500 plus 7,000, you get 10,300. Now 17,200 plus 10,300, you will get 27,500. Okay. Next, you will take all the less items. So which are the items to be deducted here? So if you see the first one, check deposited into bank but not credited. So check deposited into bank but not credited. How much? 4,000. Next one, insurance premium paid by the bank. So insurance premium paid by the bank, 6,000. Next you have bank charges, 400. So bank charges, 400. Now what you have to do? Add these three right in the outer column. So you'll get 10,400. Now 27,500 minus 10,400. Your answer is 17,100. Now what is this 17,100? Since you have begin your answer with bank balance as per cash book, so ultimate answer what you get is bank balance as per passbook. Suppose you have begin with bank balance as per passbook, then your answer will be bank balance as per cash book. So bank balance as per passbook is 17,100. Hope you are clear with the problem. Now moving on to the next problem. From the following particulars, prepare bank reconciliation statement as on 31st/3/2019. Now they have given certain transaction. The first thing what you have to remember is you have to identify the base book. Now which is the base book here? Bank balance as per cash book they have given. So cash book is the base book. How much? 28,000. Now we shall go through one by one, that is the transactions. Now what is the second transaction? Debit side of the cash book has been overcast. Overcast means it has been increased. Now this is a cash book, this is passbook, our base is what? Cash book. So cash book has been overcast in the sense it has been increased, but passbook is showing less balance. Adjust our base book, that is adjust our cash book to passbook. So what you have to do? Minus. So your first transaction is what? Minus. Next one, out of check issued for rupees 14,000, check of rupees 7,000 cashed before 31st/3/2019. Now they have asked us to prepare BRS, that is bank reconciliation statement, on 31st/3/2019. Okay. So but what they have told, the check has been issued. How much? 14,000. But only 7,000 is been cashed. Okay, so when check is issued, what happens? Now this is cash book, this is passbook, our base is what? Cash book. Now out of check issued, that is 14,000 has been decreased in the cash book. Okay, but in the passbook only 7,000 it has been decreased. So remaining 7,000 it is showing a balance. Now which is a base book? Cash book is a base book. Adjust cash book to passbook. So what you have to do? Add 7,000. Only 7,000 we have to add because once again I'll repeat, out of check issued 14,000, only 7,000 is been cashed. Okay, so when check is issued, 14,000 check is been issued. So bank balance as per cash book have decreased to the extent of 14,000. But how much it has been actually cashed? Only 7,000. In the sense still 7,000 it is showing a difference. Now which is a base book? Cash book is a base book. Adjust cash book to passbook. So what you have to do? Add 7,000. So we are going to consider only 7,000. Next one, there was a wrong credit in the passbook. So credit means what? It has been increased. Okay, so there was a wrong credit in the passbook. Now this is cash book, this is passbook, our base is what? Cash book. So there was a wrong credit in the passbook in the sense bank balance as per passbook have wrongly increased. But which is a base book? Cash book is a base book. Adjust cash book to passbook. So what you have to do? Add. Next one, bank charges debited in the passbook. So debited means decreased. So bank charges debited in the passbook. So this is cash book, this is passbook. Our base is what? Cash book. Bank charges debited in the passbook. In the sense it has been decreased, whereas cash book is showing more balance, which is a base book. Cash book is a base book. Adjust cash book to passbook. So what you have to do? Minus. So this is minus. Out of check amounting to rupees 8,000 deposited into bank, only 5,000 collected. Now what happens? 8,000 they have deposited, but only 5,000 they have or bank have collected. Now when check is deposited, bank balance as per cash book has been increased to the extent of 8,000. But how much the bank have collected? Only 5,000. So remaining 3,000 is what? Cash book is showing more balance. So which is a base book? Cash book is a base book. So minus 3,000. Minus 3,000. Direct payment made by the customer to the bank. Now a customer have directly paid into the bank. So this is cash book, this is passbook. Our base is what? Cash book. Now direct payment made by the customer into the bank. So bank balance as per passbook have increased, but not known to the organization. So in the cash book they have not recorded. So which is a base book? Cash book is a base book. Adjust cash book to passbook. So what you have to do? Add. So this is add. Now we are done, or we have identified which are the transactions to be added and which are the transactions to be deducted. Now what you have to do? We have to record in bank reconciliation statement. Now go through the solution. Write the heading bank reconciliation statement as on. So your format is simple, particulars, amount and amount. So how do you begin? So we will begin with bank balance as per cash book 28,000. So bank balance as per cash book in the outer column 28,000. Next we will record all the add items. So which are the items to be added? That is, if you see the third one, that is out of check issued 14,000, only 7,000 is been cashed. So how do we write? Check issued but not presented for payment, that is 14,000 minus 7,000. So we'll take only 7,000. I have told you why we have to take only 7,000. Next, the items to be added is, there was a wrong credit in the passbook, 12,800. So wrong credit in the passbook, 12,800. Next, direct payment made by the customer, 900. So direct payment made by the customer, 900. Now add these three. So how much you'll get? So if you add all the items, so you'll get 20,700. So 28,000 plus 20,700, you'll get 48,700. Now deduct all the less items. It is less. So which are the items to be deducted? That is, debit side of the cash book has been overcast by rupees 100. So write the same sentence, debit side of the cash book overcast 100. Next what we have, bank charges debited in the passbook 400. So bank charges debited in the passbook 400. Next, out of check amounting to rupees 8,000, only 5,000 is been collected. So check deposited into bank but collected by the bank. How much? 8,000 minus 5,000, you will take only 3,000. That is the difference amount you will take. Now add these three. So you will get 3,500. So 48,700 minus 3,500, you will get a balancing figure, that is 45,200. So you have started your answer with bank balance as per cash book. So what would be the balance then? What would be the ultimate answer what you get? That is bank balance as per passbook, that is 45,200. So hope you have understood how we have to solve a problem on bank reconciliation statement. So in my next session also we shall continue with few more problems on bank reconciliation statement. So today we have learnt about favorable balance as per cash book, that is deposit, where we have solved two problems. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.